Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Thursday, May 28th. Stocks spent the first half of the session seeking direction, but they were able to move markedly higher after a 7-year Treasury note auction went off without any surprises. Concern that economic recovery efforts could be complicated by higher borrowing costs that stem from rising yields had market participants closely watching today's 7-year Treasury note auction. The results of the auction were in line with those of recent auctions, so the lack of surprise helped take the benchmark 10-year note higher and its yield lower, after it had oscillated in the early going. With Treasury yields moving off of their highs, stocks were able to put together a sustainable advance and nearly reverse the prior session's losses. Gains were broad-based, but financials scored the best gains by advancing more than 3.5%. Meanwhile, tech giant Microsoft was a primary leader in the Nasdaq amid reports that the company is no longer in serious discussions with Yahoo to combine their search efforts. General Motors made gains early on after the company announced that its bondholders accepted an amended debt-for-equity offering. However, the stock finished with a loss as investors continue to question whether the company will be able to avoid bankruptcy. Shares of retailers underperformed the broader market for the entire session. Home improvement retailers were primary laggards in the group after the first quarter mortgage delinquencies rate clicked higher to 9.1%, threatening to add to housing inventory and depress building activity. To that point, annualized new home sales for April came in near expectations, but the monthly change fell short of expectations. In other economic news, April durable goods orders, both including and excluding transportation, topped expectations. However, March orders were revised markedly lower. Continuing jobless claims keep climbing to record levels, most recently coming in close to 6.8 million. However, initial weekly claims came in at 623,000, suggesting that the pace of layoffs is slowing. In commodities trading, oil prices settled 2.5% higher, above $65 per barrel for the first time since November. The advance was helped along by bullish inventory data, which followed news that OPEC will hold production steady, as expected. I'm Jeffrey Ham for Briefing.com, and thanks for listening.